As of the market close on Friday, April 24th, 2026 at 4 p.m. Eastern Time, IREN Limited is priced at $50.64 per share. This reflects an intraday movement of minus $1.38, or a 2.65% decline from the previous session. While the headline number shows a slight retreat, the reality lurking beneath the surface is far more aggressive. For a stock that has often been pegged as a mere play on digital assets, IREN is currently exhibiting trading patterns that suggest it is decoupling from the broader crypto pack and gravitating toward the high-performance computing and AI infrastructure giants. While most investors are looking at the price dip as a standard cooling-off period after its recent run, the real story is found in the massive institutional accumulation and the upcoming May 7 earnings release, where the focus will shift from hash rates to high-margin GPU cluster deployment. The common expectation for IREN stock is that it functions as a leveraged bet on the underlying price of Bitcoin. When the digital asset market sneezes, IREN is supposed to catch a cold. However, the reality is that IREN is morphing into a vertically integrated energy powerhouse that just happens to mine crypto as a secondary, high cash flow utility. If you look at the recent price action, specifically how it has held above its 200-day moving average of $47.60, despite broader market volatility, you start to see the outline of a company that is being repriced by the market as a data center play rather than a commodity miner. This shift is where the tension lies. Retail sentiment is often reactive, focusing on the daily 2% or 3% swings, while institutional desks at firms like Roxbury Financial and United Advisor Group have been quietly increasing their stakes. This divergence between the miner narrative and the AI data center reality is creating a curiosity loop for those watching the order flow. When we talk about the mechanics of the trade right now, trading volumes for IREN stock have remained consistently elevated, often crossing 40 million shares in a single session. This isn't just retail churn on the Robinhood app, it's evidence of deep-pocketed rotation. When you compare this to the action we see in Nvidia stock or Apple stock, the volatility profile is obviously higher, but the underlying demand for power-dense real estate is the same. Institutional activity has accelerated, with recent filings showing that for every dollar of the stock sold by a fund, nearly $2 are being bought by another. This provides a structural floor that didn't exist 18 months ago. We are seeing a massive shift in the individual brokerage space as well, where self-investing platforms are showing IREN as a top trending ticker alongside the likes of Tesla stock. The daily swings we are witnessing are a byproduct of this identity crisis. On one hand, you have the momentum traders who use the SoFi trading platform to jump in and out of high beta names based on 15-minute charts. On the other, you have the long-term wealth management desks at Fidelity and Schwab Intelligent Portfolios that are beginning to view IREN as a way to get exposure to the energy-intensive side of the AI boom without paying the 40 times earnings multiple demanded by the big-cap tech leaders. This creates a tug-of-war, where the reality of IREN's 100% renewable energy portfolio makes it a prime candidate for ESG-mandated funds, while its historical ties to crypto keep the get-rich-quick crowd active on the Robinhood stock trading interface. If you are using the Interactive Brokers platform to monitor the tape, you'll notice that IREN's bid-ask spreads are tightening even during high-volume sell-offs, which is a sign of a maturing market. This isn't the thin, illiquid stock it was during its early days. It's now a $16 to $20 billion market cap entity that commands respect from the major analysts. The recent upgrade from H.C. Wainwright with an $80 price target wasn't just a random guess. It was a reflection of the reality that IREN's land and power assets are undervalued relative to traditional data center REITs. Most people are still trying to figure out how many Bitcoin they can mine, while the smart money is calculating the potential rent per kilowatt hour they can charge for a Microsoft-backed GPU cluster. Before we go any further, I want to hear from you. Comment below how many shares of IREN you currently hold, or if you are looking to enter a position before the May earnings report. Are you playing this as a crypto proxy or a pure AI infrastructure play? To understand why this gap between expectation and reality exists, you have to look at what IREN actually does. Based in Sydney but operating primarily in North America, the company builds and operates large-scale data centers powered by 100% renewable energy. They own the land, they own the power infrastructure, and they own the buildings. This vertical integration is their moat. In a world where power is becoming the scarcest resource in technology, owning 1.4 gigawatts of power capacity is like owning a private oil well during an energy crisis. Historically, they used this power to mine Bitcoin because it offered the fastest return on capital, but the pivot they are making now is toward high-performance computing and AI cloud services. They aren't just buying chips, they are building the massive fridges that those chips need to stay cool and functional. Looking back at past performance, IREN was a darling of the 2025 bull run, and while it saw a steep pullback from its highs near 75, the 52-week low of $5.72 shows just how far this company has come. It has effectively survived the winter and emerged as a leaner, more diversified entity.
Their business model is now split. The Bitcoin mining side provides the immediate cash flow to fund the capital-intensive build-out of their AI data centers. This dual-track strategy is often misunderstood. Critics say it lacks focus, but the reality is that it's ingenious to avoid the massive debt loading that killed other data center firms in the past. They are using one high-margin business to bootstrap another, creating a flywheel effect that is finally starting to show up in the net margin figures, which recently sat above 50%. The trading volume and momentum we see on the Fidelity mobile app or the SoFi Invest section today is a far cry from the speculative frenzy of 3 years ago. Today, it's about execution. The market expects them to hit their targets for hash rate expansion, but the real beat will likely come from the AI side. If they announce a major expansion of their Microsoft contract or a new partnership with a Tier 1 hyperscaler in the May 7 call, the current $50 price point will look like a massive oversight in hindsight. This is why you see such heavy activity on the Interactive Brokers trading desk. Professional traders are positioning for a news-driven breakout that could retest the 52-week highs. Looking ahead, the future outlook for IREN is defined by three main catalysts. First is the Bitcoin halving cycle and how it affects their mining margins. Second is the speed at which they can convert their power pipeline into operating AI clusters. Third is the potential for a short squeeze. With short interest hovering in the high teens, any positive surprise on the revenue side, where growth is forecasted to exceed 90%, could trigger a massive buyback from those betting against the stock. This is the tension the market is currently living in. The expectation is that they will eventually struggle with rising energy costs or hardware obsolescence, but the reality of their renewable energy contracts and vertical integration provides a safety net that many online investing gurus tend to ignore. As we look at the broader landscape of investing sites, the noise is deafening. You'll hear people comparing IREN to Marathon Digital or CleanSpark, and while those are valid comparisons for the mining side, they miss the AI cloud provider transformation. If you are doing your own investing help or using a SoFi robo-advisor, it's easy to get lost in the Bitcoin stock tag. But if you are doing individual brokerage research, you have to look at the enterprise value relative to their gigawatt capacity. That is the metric that will matter in 2027 and 2028. The risk, of course, is that the AI boom slows down, or that regulatory hurdles in Canada or the US complicate their power access. However, given their current cash position and the $9.7 billion potential in their Microsoft-related deals, the margin for error is wider than it appears. In the end, IREN stock represents a classic case of a market that is slow to update its mental model. The expectation is a volatile crypto miner. The reality is an emerging infrastructure giant. Whether you are using the Fidelity trading platform to build a long-term position or the Robinhood app to catch the daily swings, the core insight remains the same. The value isn't in the coins they mine, but in the power they control. The transition from a speculative mining play to a foundational AI utility is the most significant development in the company's history, and the current price action is merely the market trying to find the right way to value that shift. To summarize, IREN has moved far beyond its origins as Iris Energy. We started today looking at a slight intraday dip to $50.64, but that number is just a snapshot in a much larger narrative of transformation. We've seen institutional players increasing their footprints, a business model that is successfully bifurcating between crypto and AI, and a future outlook that hinges on power-dense infrastructure rather than just digital asset prices. The expectation was that IREN would follow the Bitcoin chart forever. The reality is that it is starting to write its own story. As we head into the May earnings, the contrast between those who see a miner and those who see a data center will be the primary driver of volatility and opportunity. Keep your eye on the volume and the institutional filings, as they are the most honest indicators of where this stock is headed next. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involve risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.